There's a financial curse so quiet, most citizens never notice it. They lock their gold away in a vault. They feel safe. They feel responsible. But every year that gold sits idle, it loses its power. Each coin buys fewer potions, fewer robes, fewer loaves of bread. Over 10 years, the curse devalues the gold substantially. But the citizens who put their gold to work, they experience the opposite. Their gold multiplies as if cast under a growth enchantment. In the next few minutes, I'm going to show you why hoarded gold is cursed from the start and how investing can beat the curse and make you very wealthy over time. Picture this. You have 1,000 gold coins. You keep them in a chest underneath your bed, safe, untouched. What could possibly go wrong? But this is what most citizens of Aurelia don't realize. While your chest of gold sits in the dark, the Royal Mint Tower never sleeps. Every season, the Crown's mint workers stamp out fresh gold and release it into the kingdom. Some years a little, some years a massive flood. In the past 5 years alone, the supply of gold in Aurelia has grown by roughly 50%. More gold chasing the same loaves of bread, the same potions, the same staves. Each gold coin is worth less. This is the slow curse of inflation. So 10 years pass. You return to your chest. You still have 1,000 coins. But the bread costs 3 times what it did. The cloak costs twice as much. The cottage you wanted, out of reach entirely. You did not lose gold. You lost what the gold could buy. This is called purchasing power, and it's the only thing that matters when it comes to how much gold you have. This is why the wisest wizards of Aurelia never let their gold sleep. They put it to work in the only place it can grow faster than the mint can print, the Aurelia stock market. Every shop in Aurelia, Peggy's Potions, Brisk & Sons Broomsticks, Tomeworth's Bookshop, is divided into small bits of ownership called shares of stock. And the stock market is where these shares trade hands. Owning shares of Peggy's Potions means you own a piece of her shop. When Peggy sells more potions, she makes more gold, and the value of her business swells. That means your shares are worth more. Over the last 5 years, shares of Peggy's shop have increased by 12% per year. That means an investment of 1,000 gold coins 5 years ago absolutely bulged to 1,762 gold coins today. A total return of 76%. While the gold hoarder saw their wealth erode under the curse of money printing, the investor saw their wealth climb to new heights. They can now afford a lot more of the goods and services offered throughout the lands. Now, you must understand that while shares of a business can soar, they can also vanish entirely. If you buy shares of a struggling business, the value of your investment could very well plunge to zero. Just a couple of years back, there was a shop selling magical candy, but it turned out the magic behind the candy was volatile. Some who ate them sprouted feathers. Needless to say, the shop sales went to zero and the shares got vaped. So how does a beginner choose which company shares to buy? One of the most popular ways Aurelians like to invest is by purchasing shares of the 500 fund. The way it works is, citizens buy shares of this fund. The managers take the money and invest it in shares of the 500 largest businesses in all of Aurelia. By doing so, you are not buying a single shop. You buy a tiny piece of all 500 of the largest shops in the kingdom, all at once, and for a much lower cost than doing it yourself. If one of those 500 shops collapses tomorrow, its lights go dark, its shares worthless, you lose only a fraction of your gold. Frustrating, but your investment survives. But if one of the shops experiences an explosion in profits and goes up tenfold, your investment won't go up 10x since it's only a small part of your total investment. So buying the diversified fund of shops decreases your risk, but also limits your upside. It's a safer approach to putting your gold to work. Over the past 10 years, a wizard who placed 1,000 gold into the 500 fund and simply held it would now have roughly 3,700 gold pieces. That's a 14% return each year on average. That's without studying a single business, without staying awake at night wondering if Peggy's Potions are still selling. Notice how the average return each year is 14%, but the total return over the 10 years was 270%. This is the spell wizards call compounding, the wizard's most powerful financial spell. After year 1, your 1,000 gold turns to 1,140 gold. But the next year, the new higher starting value grows at 14% to 1,300 gold. The first year of growth adds 140 gold, while the second year of growth adds 160 gold. The 14% figure here has its own name in the wizard's ledgers, the compound annual growth rate, or CAGR for short. It's the per-year return that describes the total 270% return over 10 years. But this brings up a key point you must understand. That climb did not actually happen in a straight line. There is always volatility, or fluctuations in the value of your investments. In the spring of one cursed year, the entire market fell more than 30% in a single moon cycle. Then came the long winter. All shop activity came to a standstill, as if every shopkeeper in Aurelia had been hit with the same hex on the same morning. Many wizards and witches panicked. They sold their shares at the bottom in fear of losing even more. But those who held, they watched the kingdom recover. The stores reopened, the shares once again started climbing, eventually past the old peak, and kept going, and going, and going some more. This is the first true test of the stonk market. Not whether you can pick a winner, but whether or not you can hold through a winter. Now here is something every wizard learns the hard way. It is rarely the shops that vaporize a beginner's gold. It is the wizards themselves. Two ancient curses haunt the Aurelia stonk market. Most beginners catch at least one in their first year. A friend at the tavern leans across the candle and says, "Master Drogath's enchanted pet shop is going to triple by the next moon. Get in now." The naive wizard rushes to the market the next morning and pours their gold into Drogath's shares. 2 weeks later, the enchanted pets eat their owners. The shares absolutely plunge, pretty much worthless overnight. The whisper curse is what happens when you buy shares on a whim, because someone told you to, not because you actually understood the business. It is the loudest source of beginner ruin in Aurelia. The second curse is that of the panic sale. The long winter arrives, the market falls. The cursed wizard runs to the market and sells every share they own at half the price they paid. A year later, the kingdom thaws. The shares climb back. They climb past where the cursed wizard bought in. They climb to twice that price. But the cursed wizard is no longer holding any. Then they buy back in at the highs. Both curses stem from the same source. The wizard does not trust their plan. They bought because someone whispered. They sold because the wind howled. There was no plan underneath. The cure is not a stronger spell. It is a clearer plan, written before the storm arrives. So how does a wizard with no experience get started investing? What is the best strategy? The answer is older than the kingdom itself. It is called the recurring investment. Each moon on the same day, the wizard takes more gold to the stonk market. They can choose to acquire more shares of the 500 fund or shares of individual shops they believe will grow the most in the future. This strategy is a conservative base approach because not even the greatest oracles or seers in the kingdom can reliably forecast which days the market will rise and which days it will fall. Many have tried, and most end up running tea shops and selling crumpets. I want to leave you with one last secret of Aurelia. Many beginners never learn it. The ones who do are changed forever. When your investment account holds only a small amount of gold, your deposits matter more than your returns. Earn 15% on 100 gold and you have 15 more. But add 15 gold from your wages and you matched it without picking a single share and without waiting a year. So in the early years, the wizard who deposits faithfully every moon will outpace the wizard who only deposits once and tries to pick the next 1,000-fold play. Keep adding gold to your account aggressively early on. And one day, Your account will hold 10,000 gold, then 100,000, then more. At 100,000 gold, a 15% year is 15,000 gold. To match that with deposits alone, you would need to add over 1,000 gold every moon for a year, with no exceptions, and no nights at the tavern. Most wizards can't keep up with this, and it's not even close. This is the moment the growth spell kicks in. Your daily labor still matters, but the gold in the markets is now the larger force. The wizard's investments have reached escape velocity. Most citizens of Aurelia never see this moment. Not because the moment was reserved for a chosen few, but because they hoarded their coins in a chest, where the Royal Mint Tower's quiet inflation curse slowly ate the shine off them, year after year. So, what does the path look like altogether? The first key is becoming aware of the dark curse of inflation, the creation of more gold units every year that eats away at the value of each unit. Those who keep their gold tucked away under the bed are being robbed slowly over time. It's so subtle it's hard to notice, but you feel it over time. So the key is to invest the gold instead, buying shares of successful shops through the stonk market. The safest approach is to diversify, meaning to buy a fund that holds shares of hundreds of shops. This reduces the risk of catastrophic loss, but also reduces the growth potential. The more aggressive approach is to pick a smaller portfolio of shops yourself. Maybe you pick your 10 favorite shops in Aurelia and buy their shares. A smaller portfolio with more risk, but also a higher chance at seeing a massive surge in wealth in fewer trips around the sun. Next, avoid being too clever. Don't try to time the tops and bottoms of the market each day. You will end up exhausted, embittered, and likely without a single gold piece to your name. And most important of all, work hard and add more gold to your investments regularly. Your goal is to grow the amount of gold working for you as quickly as possible when you're just beginning. Stay the course and trust it will work out long term. I will see you again soon.